Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendahl with tonight's Deep Dive. It is December 6, 2017, and tonight's highlighted market's going to be copper. The ETF is CPER, and we're going to look at this market because of something that actually happened yesterday, and it's a nice setup for where potentially the market will be going in the next day or so. So as it stands right now with tonight's closing prices, we have a mixed bag here when it comes to some of the different trends. We got the short term down, no surprise given where the market's gone. Intermediate is still positive because it hasn't really registered for the most part the debacle that occurred yesterday, but the long-term trend is matching that of the short term. Hence the reason we have the mixture here. The technicals are still on the negative side, but it's the pivot low that is addressing tonight's deep dive. So let's take a look specifically at the market and see if we can't take a look at copper. So these are daily bars. This is the TradeStation platform, and what we're looking at is yesterday's sell-off that occurred. This yellow box here, a crosshair type thing, is what triggered yesterday, and it's a condition where the market becomes dazed and confused is probably the best way I can express it. Anytime the market really sells off, the market says what the world is going on, and it's the next day, meaning today, that we really get a feel for what we can actually do with that kind of a sell-off. So what did take place yesterday is it came down to the support that we have here. These cyan colors right here. We get a 26, which is quite strong. The specific number is just a hair under 3. It's 2.9338. Now, what did take place yesterday is that the market was in a little consolidation phase and it dropped huge. Came right down to that support level, and today's action had the market start to find some support and rally to the upside. Not huge, but it did tick up. And so, in other words, it didn't continue the massive sell-off. We have a pivot low that occurred here in the elastic level, and this is an early sign that the market's going to find some support here. There are many other conditions we really need to be looking at, but for the most part, that's a good sign. Now, I just want to note this on the value chart indicator that today's bar has no red. You can see just a little bit of the red yesterday, but today's action is all yellow, and the yellow represents an oversold condition, no doubt, but it's not extremely oversold. And so the condition that was panning out yesterday, where the market theoretically in this particular stage could either continue to fall off and go into a complete bear market, or is the market just selling off, finding a base, and then going to rally? So I'm going to show you a couple of examples. I want you to note the yellow crosshair here, and I'll go back in time trying to find another condition. Here's one where we had the yellow condition, meaning the yellow crosshair here. The market sold off very quickly, base for a day or so, and then rallied to the upside. We had obviously historically we had a couple of elastic level pivots. The pivots were bullish, the market rallied, all went well. That's theoretically the condition we're in right now. If we go back further, we can find scenarios. We've got one here and we have one here. What I'm going to do is highlight at least this one right here, where the market sold off. We had the same little pop-up screen that highlights the fact that the market had a huge sell-off, and that the market continued to sell off here. And so the condition that we're here in copper, whether it's a market that is in free fall and really going to take a while before it's going to base and really find some support. Note this support, and note the fact that I addressed the fact that the market was at some key support. as well as over here where it's not at any key support and the market continued to sell off here. So the difference for the most part when the market sells off like this is that it's looking for support. And if we again kind of cursor back to today's action, this is that main support. So whenever we see a yellow crosshair, what it means to us is that the market has had a huge sell-off, at least on the negative. We'll look at the positives in the future here, but the fact that the market has had a huge sell-off, it's a warning that some condition is taking place, and what we really need is some support to the market to be nearby, and obviously we have that in this unusual case right now. In the past, those two examples I gave to you, the market truly didn't have any key support near it. So with the fact that we have a pivot low that is forming, this is an early stage. The appropriate word, highlight, bold, italicize, the word early is really quite important here. But for those that are aggressive, you might want to look to go long. Those that are conservative, what we'll want to wait for is the secondary signal that will be coming from our elastic level, and that's not coming in the next day or so. So if you're more of a conservative trader, you'll probably want to wait for a little bit. So let's just take a look at the website and just get some perspective here. I mentioned that the technicals and the way you find this is you come to charts, you come down to watch lists, and this is a highlight of all the different watch lists we have. We've got 18 of them here on the side. There's more in the background, but for right now we've got 18 that we're highlighting here. You can see that copper is at the low end here where it's negative. That sell-off that we had yesterday is still having a weight to the market, weight meaning the heaviness to the market, and what that means is that the market still has a technical rating that is negative, but that's to be expected obviously if when you have a major sell-off like that. So if we look at our elastic level, and you find this by going to charts, you come down to elastic, and then you come down to this particular chart, you can see that copper, both domestic copper and LME, London Metal Exchange copper, are both negative. I also want to highlight the fact that when we look at copper, the fact that it is oversold, extremely oversold, that's what the X represents, that in this particular case, this happens 6.7% of the time. So it's not really all that unusual for the market to have these types of sell-offs. And for the aggressive trader, this means that there's opportunity. That's really what we're looking for here, and the conservative trader would want to wait for a bit, but the aggressive trader, you're looking for these massive sell-offs so that you have an opportunity to potentially go long. The other thing I want to point out, and the way you'll get to this is you come to recent signals, then come down to recent signals, and at the bottom of this graphic we have a lot of different performance metrics and some market stats. And so what I want to do is I want to take a look at the two things. Well, first one is going to be contract normalization, and because of the volatility that we had in days past as well as yesterday, copper is down here. That if you were to trade the S&P, you see that it's highlighted in black while all the other ones are in gray, that copper, gold, RBOB gasoline, crude oil, they're all below, just a hair, but below that of the S&P 500. So the S&P is less volatile than any market that is below it, and those markets that are above, use corn here as an example, that if you traded the S&P and you wanted to translate that into into corn, you'd be trading 4 contracts versus 1 E-mini. When you look at crude, you look at RBOB, you look at copper and gold, but we're obviously focused on copper here. It's a little unusual that you'd have copper below that as far as the volatility associated with copper versus all the other markets, specifically here in the case of S&P, that it's actually below that of the S&P 500. So that's just an indication of the extreme volatility that is associated with copper. The other way we can look at this, again, if you're on this particular page, any of the market stats or system stats pages, you can come to the bottom here and you go to a dollar risk. And what I want to show you here is it's basically a chart that is either conservative or aggressive. I'm just going to focus on the conservative side. And you come down here to copper, you can see that we have the long side risk and we have the short side risk. Long side is this lighter color. The darker color for copper is the short side risk. There's less risk right now on the short side, no doubt, because we had a huge sell-off to the market. And so that being the case, that there's a little more risk on the upside for the time being. But point is that there's good opportunities to be had when you're looking at fear in the market. And when we look at the S&P 500, or excuse me, when we look at copper, that huge sell-off, this is where people, lack of a better term, freak out, and they forget to take advantage of what the markets will present to them. So the fact that we came down, we found support, we have this relatively rare condition. I think if we go back in time there, back many years, there might be 10 conditions where we have this yellow cross here, where the market has had this huge sell-off, and it's even rarer yet that we come right down to support. So an aggressive trader would be looking to go long the market. A conservative trader would be looking to go long the market, assuming that we have a secondary condition here in the elastic level, which we don't have right now, but when we do get, and you can watch the deep dive, whether I address it or not in the deep dive video blog, what you'll be looking for is a condition where we have something here in copper where you'll have a pivot low or a slow low, which is really what you're going to be looking for, that will pop up here on the copper side. We may even get a wave level low coming here in the next day or so. It just depends upon how things actually work out. And this also assumes that we actually hold the support to copper, and then we would move forward from there. So bottom line is that I'm starting to introduce more and more pattern-based indicators that will help you to really get a feel for the conditions that are underway, so that they're not just me pointing these things out. These are coded alerts, if you will, to what the market is doing, and it's a testament to taking things away from the systems and really starting to program things specifically for the alerts. So I have a ton of systems, as I think most of you know, and it's a matter of digesting those systems and taking them from systems back to alerts, and starting to put those into our deep dive analyses. So you'll see more and more of those things popping up here in the coming days and weeks, and it'll I think serve a purpose that for those that don't want to follow the systems for whatever reason, but you're still looking for alerts on the market, that you'll find that of interest. So that's essentially what's happening with copper. The aggressive trader, you can start to look to go long the market, but keep your stops very close. For those of you that are more conservative, what you'll be looking for is to wait for a day, 2, 3 or so for some additional conditions to pop up here that say that the all clear, that we've actually truly found support here to the market, and the market's going to rally. The downside, or what you give up, I should say, in this particular instance, that by being conservative, if copper should really bounce in the next day or so, then you'll have missed that opportunity. That's where the aggressive traders get to take advantage, but if you got to be in it to win it, basically, and the conservative trader is looking more for a base here and then a bounce to the market, and that's worked. They risk the opportunity to miss that little bit of a bounce here. So we'll see what does take place, but do keep very close tabs on copper, and we'll take a look at some more markets in the coming days. Thanks. Bye-bye.